this week, a roller coaster ride for the market. The Sensex up 500 points on Thursday, down almost 400 points on Friday. We'll tell you what your investment strategy should be. Raghuram Rajan surprises the market with a rate hike. Repo rate hiked to 7.5%. We'll tell you what this means for your bank stocks. And we'll review Shadmila Joshi's portfolio, talking about stocks like Godrej, M&M and Jindal Steel. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors. And what a week it has been. It's bipolar, almost up one day, down the next. Over the next half hour, we will tell you what your investment strategy should be in these very confusing times. Remember, there's an email ID at the bottom of your screen where you can send in any question you have about your stocks. You can also reach us on our Facebook page. Before we go any further, let me bring in my colleague Ajay to update us on the market. Ajay, take us through what the market was reacting to this week and what you expect to happen on Monday morning.
Well, that's correct, Faye. In fact, it has been extremely volatile for the Indian markets along with or in line with some of the other emerging markets. But on a net basis, we have managed to gain around 3% on the key indices as far as this week is concerned. More to do with how the sentiment across emerging markets changed after the US Fed came out and announced a pretty dovish policy and a pleasant surprise coming in from the US Fed, and did not go forward with the much talked about tapering program as yet, keeping it in abeyance and indicating that probably when the economic indicators in the US start indicating to a stronger recovery, then only it will make sense to start the taper. And this triggered a rally not only in equities but in currencies across emerging markets. India participated very nicely in that, and that's why we are talking about around 3% gains coming in for the benchmark indices. In fact, amidst the volatility, Nifty managed to close above the 6,000 level, and that is being seen as a very important one. The dealers and the traders on the street believe that the liquidity environment for emerging markets, including India, will remain very benign. We have seen 5 straight days of big FII buying coming in, and hence market will at least try to renegotiate the earlier highs of around 6,200 in the near term.
Well, Ajay, obviously one of the biggest reactions we saw this week was from the banking sector. Nobody expected the banking sector to react so sharply to the Fed's announcement. And then again on Friday, obviously to the RBI's announcement, we saw a reaction again. Take us through what happened in the banking sector and who the big losers were.
Well, that's correct. Equally surprising announcement coming in from our RBI governor. The new governor did not really go ahead against the populist expectations or consensus. He actually went ahead and hiked the repo rates, and that actually took the wind out of the banking stocks completely. The bank Nifty lost 500 points, but this needs to be taken into light that we had gained around 2,500 points in the previous 15-20 days. Also, all is not very negative in the policy. It may sound very hawkish because it directly addresses the key problem of the Indian economy, which is very elevated levels of consumer and wholesale prices. At the same time, he went ahead and reduced the MSF window, the short-term borrowing window, with the large amount of borrowings is right now being conducted by that window, very sharply, about 75 basis points. However, the banking analysts believe that at least in the near term, the borrowing costs of the banks may remain higher, but in larger scope of things, for the economy, addressing inflation head-on was a much better and a prudent thing to do. However, the Bank Nifty saw a big cut of 500 points. It had gained a lot, and expectation was very high of a dovish policy from the new governor. Also, a lot of traders are indicating that within a matter of 10 days, we would start focusing on the second quarter numbers, which is expected to throw equally nasty surprises from the large cap banks because of high NPA concerns. Margins are expected to be pressure. So this just took an opportunity for profit booking to set in, but the policy did not really have very hawkish details. In fact, it is being seen as a very balanced policy. But of course, banks took the knock on the chin.
All right, Ajay. Many thanks for joining us with that update. Ajay, they're giving us the latest on the market. Joining us now in the studio is Shadmila Joshi, the head of equities at Peerless Securities. Shadmila, it's always such a pleasure to have you in the studio. Ajay was just taking us through what happened this week. Almost a bipolar market. Net, we still have a good week. But how should we as retail investors be reacting to a market like this? How do we understand this? How do we figure out what's going on, and how do we, place our investments?
Very difficult, because I think that, as you said, what's happened in this week is quite topsy-turvy. But I think the key takeaway should be that the tapering that was expected, and that would have meant that a lot of liquidity would have gone out of the system. That's been postponed, but maybe by 3 months. So I think in the near term we need to watch how flows are, because I think if you see very strong FI flows again coming to emerging markets in the next couple of months, then you could really see higher levels without really anything having changed on the ground in terms of where your economy is going or whatever. I mean, all the other reasons. So definite positive for the rupee. I think that's one big key takeaway, that for the rupee it's a definite positive. But really speaking, what it will do to the markets in the long term is like anybody's guess, because as Ajay was saying, you have quarter numbers coming up that could throw up some nasty surprises. Maybe we could see the announcement of an election that could, market could react negatively to that. So there are any number of events that market could react to negatively going ahead. But for the near term, I think we have to take it as a positive, especially the fact that Nifty has closed at a level above 6,000. So we really have to be very nimble. And if you're trying to buy something, I would say don't go and buy everything in one go. Try and buy on dips. But yes, I think, definite word of caution, especially if markets were to go back to the 6,100 kind of level.
At this point, can you give us 2 or 3 stocks at the top of your head right now that you are focusing on, that will get attention from the, the liquidity that you're talking about?
I think both ways. Let me talk first of a scenario where you have markets going down, because I think there is one thought in the market that you could see in the next couple of months, market getting dragged down back to 5,300, 5,400 kind of levels. In which case, I think you should, therefore, if you see that kind of a scenario play out, you have to again focus on frontline stocks. And there, I think, include one IT name for sure, whether it's an Infosys or a TCS, definite, or an HCL Tech, which are one of these 3. Maybe one stock from FMCG, so I would say ITC or HUL. Again, you can choose one stock from pharma, and definitely one stock either from the banking or metals, because I think in both you could see good pullbacks from current levels.
You didn't name a pharma stock? Are you still standing by IPCA Labs, or you want a more frontline stock?
No, yeah, frontline stocks I would say Sun Pharma.
Okay, Sun Pharma.
IPCA is like a mid-cap pick, but Sun Pharma though.
Alright, so these are Sharmira's recommendations. Infosys and TCS in the IT sector. She talked about ITC and HUL for FMCG, and Sun Pharma in the pharma sector. We're going back to the defensives on this market right now. We'll take a few questions, and not surprisingly, a lot of the questions this week are about the banking sector. Manish has written in 100 shares of Karur Vysya Bank, which he bought at 560 rupees. He wants to know if he should hold on to that stock. What's your call on Karur Vysya Bank?
That's the pain a lot of these private banks have felt, because they've been more dependent on wholesale banking, and that's where a lot of these RBI measures have hit. So possibly stocks like a IndusInd Bank or a Yes Bank or a Karur Vysya, they've kind of corrected out of hand. So you'll have to see whether how slowly or how quickly rather these measures are rolled back, and these banks begin to get their deserved valuation kind of again. So really leave it up to him. According to me, this is going to take time, because it will be once those measures are rolled back. And we've seen some start of it today, but it's very obvious from the tone of the policy that is going to be in a calibrated manner. So nothing's going to happen very soon, and you are going to see pullback in these stocks, but it's going to be a very slow process. At the same time, I think the positive is that when you start seeing pullback in banks, to my mind, private banks will recover faster than the PSU banks, simply because they feel a lot less pain on the NPA side. So I think the pullback there will be faster. So from that perspective, I think he can continue to hold on to Karur Vysya. Only as I said, my caveat will be that the wait could be a little long.
I'm going to quickly take a portfolio of one of our viewers. Nimesh has written in. He has these stocks in his portfolio. He wants to know whether he should hold on to them. Right on top of that list, 100 shares of SBI, which he bought at 2,100 rupees. SBI ended the week at 1747. What's your call on SBI?
I think I'm positive, and I do have a buy on SBI. I think it's there in my portfolio as well. So for me, this stock remains a hold. Yes, I think among the PSU banks, you have seen deep cuts come on even the larger banks, and SBI being no exception. And I think that pain will continue for a couple of more quarters from all accounts. So I'm not really expecting the stock to run away in a hurry. But if it's a portfolio he's building, then I think this stock finds place there.
Well, he also has 500 shares of Corporation Bank, which he bought at 365 rupees. That stock ended the week at 272. Corporation Bank, again, one of those stocks that you were talking about that saw a slightly larger cut there. What's your call on that stock?
Actually, if I were to just look at his entire portfolio, I mean, you're talking of a lot of names from the finance kind of space, the financial services space or banking space. So I don't know if you're just saying like a section of his portfolio which is not doing well. If that is the case, then it's fine, because I think individually these names are fine. But if it's your entire portfolio, then it seems to be a kind of skewed towards that. So that's something that you need to watch out for. But otherwise, I think by in itself, Corporation Bank is as good or as bad as some of the other mid-cap PSU banks, and it will go through its share of pain before it really moves up again.
We'll take the next two stocks together. There's IDFC, which he bought at 140 rupees, and there's L&T Housing Finance, which he bought at 250 rupees. What's your call on both of these stocks?
I prefer LIC Housing Finance at this point in time. I think, again, from a banking perspective, I think it's a good candidate. And IDFC also, I think at current prices is fine. I would see the stock at 115, 120 levels, but 140 is a little on the higher side since its buying price is 140. So maybe when it comes closer, and it had gone to that 110, 115 level before correcting back to 99 level. So I think if he gets that kind of a level again on IDFC, maybe he can shift partially to LIC Housing Finance. But I think LIC Housing Finance 250, 270 kind of level is quite likely on this stock.
When we come back after this break, we're going to take a look at Sharmila's own portfolio. We'll talk about stocks like Godrej, M&M and Jindal Steel, helping us figure out our strategy for our long-term portfolios. It's time for us to take a look at Sharmila's own portfolio. Now, she designed the portfolio for us on this show on the 21st of December last year. We've been tracking it on a regular basis every time she's back on the show. Now, the overall loss in this portfolio right now is close to 14%. The Nifty over the same period is up about 2%. I'm going to give you a list of the stocks in this portfolio. I'm going to talk to her about it immediately after. Now, there's L&T, Central Bank, Godrej Industries, Island FS Transport, Ipca Labs, JSPL, Kanhaiya Ceramic, M&M and SBI. Well, Sharmila, obviously, when you're down 14% and the Nifty is up 2%, that could be a little disappointing. But do you believe this is the market to make any changes? Or do you think that, like the rest of us on this portfolio as well, we should just sit tight and wait for this volatility to play out?
Very honestly, a couple of weeks earlier, I was more worried about the portfolio than I've been in the last couple of weeks. Because, just a couple of things changing has, meant that markets have moved in very mysterious ways. So, I think the trick should be to stay with stocks where you have like conviction and then wait for sort of normalcy to return. And so I mean, I'm okay with the stocks, so I therefore reviewed the stocks that I have on my list, because to me at the end of the day that is more important really than what markets are doing, and because they could be doing anything depending on what someone says or doesn't say. So therefore I think I'll leave it unchanged. If I feel there is something going wrong with an individual stock, or maybe with a stock within the same sector has a chance of doing better, then we can change. For instance, yes, I think maybe I could change Central Bank going ahead. But as of now, I don't really see any other kind of mid-cap PSU which is going to do substantially better. No name is suggesting itself to me from that point of view. So I'd rather leave the portfolio the way it is unless I see something really changing very drastically for any of the stocks that I've recommended. Another case in point is Island FS Transport. A single day of buying has pushed the stock up 7-8% in a day. So yes, it's down from the time I recommended it, but we have a buy on the stock. So like you advised us in the beginning of the show, is there anything you would like to average out at this point, or do you think that you would not make any changes at all? I did average out some things, and I did get rid of a couple of stocks, maybe 2-3 weeks earlier. So I think for the moment I'll stay put.
All right. So for the moment we're staying put in Sharmila's portfolio, not making any changes. Remember, every time she comes back into the studio, which is every few weeks, we take a look at this portfolio again and we track how it's doing. I'm going to give you a recap of the stocks in our portfolio. There's L&T, Central Bank, Godrej Industries, Island FS Transport, Ipca Labs, Jindal Steel, Kanhaiya Ceramic, M&M and SBI. And of course, if you have any questions for Sharmila about that particular portfolio, feel free to write to us. Email ID is at the bottom of your screen. Let's move on and quickly take a few more questions. Pramod has written in. He has 25 shares of Maruti, which he bought at 1,200 rupees. He wants to know if he should hold on to that stock. He's making a profit of about 200 rupees per 267 per stock right now. What would you recommend he does, and how much more profit do you expect him to get in Maruti, if at all?
I mean, he's been fortunate to make money on Maruti, because I think there would have been a time maybe a year back where he wouldn't have made money on the stock at the price that he bought. So things have changed for Maruti. You are seeing better numbers, but I think you have to bear in mind that you are seeing better numbers because they are being compared to numbers a year back. But the sector as such, I think, is not doing well at all. And I think the Maruti management has also come and said that they are expecting, sales growth in like single digits. And
now with interest rates where they are.
Absolutely. As well as there have been some gains for Maruti because of the yen issue, and they've seen some gains coming because of that. So my target on the stock would be about 1600. So from that perspective, if he wants to hold on, it's a different thing. But since he's making
how long
money,
do you think it's going to be before 1600 for him?
I would give it about 9 months.
About 9 months. Okay, I want to very quickly take another question with the auto sector. Vijay Rahavan has written in. He has 12 shares of Hero MotoCorp, which he bought at 1670. He wants to know if he should hold on to that stock. The stock ended the week at 1981. Well, the promoters have just increased their stake in the company. And we've heard a lot of very positive voices coming out of that company, talking about launches over the next year or so. What's your call on Hero MotoCorp?
Overall, I think the two-wheeler space is in an even more competitive space than what four-wheelers are. Simply because we've had, for Hero Motors, for instance, Honda breakaway and launched their own brand, and that has eaten into Hero Motors market, which is possibly why they've gotten more aggressive on the way they are advertising. So to my mind, 1900, 2000 would be closer to the target that I have in mind for Hero Motors as things stand. So it's a good stock, having said that. So if it's a portfolio stock and he wants to continue to hold it, it's fine. But if he's bought it for gains, then I think he can book some profit here.
I'll slip in one more question. Prajneet has written in. He has 28 shares of Tech Mahindra, which he bought at 609 rupees. He wants to know if he should hold on to that stock. The stock ended the week at 1296. It's also forwarded now into engineering education, and we've seen it do really well over the last few months. What's your call on Tech Mahindra? Would you recommend he holds on to it?
Overall, I think IT as a space is doing well simply because I think that for a lot of IT companies, they are now hearing good things from overseas, whether it is Europe or US. And that has been conveyed in the way the management speaks about the orders that they're getting or the margins that they're getting. The only concern for Tech Mahindra could be the Satyam bit because you keep hearing things that, now there is some new litigation that's going to come against that or whatever. But I think otherwise I would be really fine holding on to Tech Mahindra. Again, I think he's making a lot of money. So if he's looking to book profit from that perspective is different. But if you're looking at it as a portfolio stock, whether you should hold on to it, I think it's a definite yes.
Time to take a very quick break. When we come back, we'll talk about stocks like Bajaj Electricals, BHEL and PFC. Well, you recommended Bajaj Electricals when it was trading at 178 in November 2011 with a target of 241. And the stock is currently at 162. Now, for those of our viewers who are still holding that stock, what would you recommend they do?
They had actually. It had come quite close to this price in the interim. But, that entire space is seeing some kind of a slowdown. Everything that is in that space where you're talking of the kind of household goods or the EPC business or whatever. So I think it's a tough time for, stocks within that sector. So I think it's a good stock otherwise. So you can continue to hold on to it. You'll just have to wait for really the tide to turn for companies which are in a similar
that space. All right, so hold on to that stock. It might be a bit of a long wait, though. It's time for us to take a look at another portfolio sent in by one of our viewers. Ramesh has sent in a portfolio. He tells us these stocks are a section of his portfolio, so it's not all of it. But these are the ones that he's especially disappointed with. So he sent us that list. He has 500 shares of BHEL, which he bought at 139 rupees. He wants to know what to do with that stock. The stock ended the week at 135. We've heard talk about orders for BHEL, but we're not seeing too much movement in the stock. What would you recommend he does with that stock?
In fact, he's lucky because I think the stock went down to 100 levels and it has recovered to 135, in this last month or so. So my recommendation to him would be, because if it's a portfolio and if he wants to keep it, then I think he can look to add to the stock if he sees,
if he's planning on holding it for the long term.
Yeah, if he's planning on holding on for it to a long term, then look to add when it goes lower. Because there is every chance that you could see a fall on this stock again, given how volatile markets are. And at this point in time, there is really no change in the situation for capital good companies because you're really seeing no relief in any form, whether it is in the interest rates that, or the orders for the power sector that BHEL is dependent on. You're not seeing any relief anyway. So things haven't changed from that perspective. So if you see a fall for BHEL, you should look to add. That is if you are planning to keep the stock as a portfolio stock. Otherwise, I think, you're lucky it's recovered to this level. Just, watch it for a bit and exit it.
Alright, he also has 1,000 shares of MCC which he bought at 23 rupees. Stock's come down to about 17 rupees right now. What should he do with that stock?
I think it's similar, to my advice on BHEL, because again, I think possibly NCC is in even more trouble because it's a more leveraged company and it's based in Andhra, etc.
Yes.
And nothing is really working again for stocks in the infra or in the road sector. And I think you can easily give it another year before you see anything really substantially good happen over there, because I don't think that until you have an election and you have a new government, really is anyone going to talk very, in a very positive way for these. So, I think that if you are again looking at it as a portfolio stock, then even then I would really say that you can switch out of it. I prefer IL&FS Transport because I think, given their parentage and as well as the kind of orders that they have within the road sector, and to my mind, within the infra space, the road sector will recover first. So, why don't you switch to IL&FS Transport?
He also has 150 shares of MCX, which he bought at 456 rupees. That stock has seen some rough weather. The sector has seen some rough weather altogether. What would you recommend he does with that stock?
This is another tricky one, because there is a confidence issue here at the end of the day, because it is an exchange and you've seen financial technologies and MCX. Because of that, MCX go through a lot of pain in this last month, and we still don't have clarity on how things are going to pan out for financial technologies and what impact it can have on MCX. So again, I think he's very lucky that he bought it at 456, which is not very far from this. I know this is a stock that moves 20% either way. So it's a very scary stock to be in at this point in time. So I'm not really going to stick my neck out and give any kind of advice on this, because I'd say sell and it will go 40% in the next 2 days if something positive works out. So I think you have to keep your ear to the ground and really track the situation as it develops, because that will clearly decide where the stock will trade in days to come.
Alright, he has 200 shares of PFC now, which he bought at 126 rupees. I'm assuming, of course, that PFC will have the similar problems that we talked about earlier, linked so strongly to the power sector. What would you recommend he does with that stock?
Yes, but I think the advantage PFC has is that it's a lending corporation, so it's not directly, producing power. So I think which is why possibly, the stock also doesn't fluctuate that much.
Right.
So this is a relatively, I think, safe stock to be invested in within, that space. So I'd say continue to hold it. It's a fairly good stock.
Alright, so unfortunately we've run out of time on this show. Remember, if you have a question for Sharmila in particular, you can send it to us. Email ID is at the bottom of your screen. You can find a copy of this show on our Facebook page, and you can reach me personally through Twitter. Sharmila, thank you so much for spending time with us this weekend. That's a wrap on All About Stocks. Thanks for watching.